All right, 12 o'clock. Gonna wait about 15 seconds here. Let the stragglers get in, and then we will get started. All right, let's do it. Today is Tuesday, April 27th, the last Tuesday in April, and this is your prop trader market update. First, quick disclosure. I'm an associated member of T3 Trading Group, which is an SEC registered broker, dealer, and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. At the time of this recording, I have the following positions. Bam! I think it's 18 or so long positions. I am still 100% long this market. I am still feeling really bullish about this market. Why? Well, we'll take a look at the charts in a minute, and we can talk about why. My background, so I've been a professional trader with T3 for I guess over a decade now. I've mentored, well over 100 professional traders at the company. I'm currently managing a group that is definitely in excess of 50, possibly double that. My personal interests are martial arts and skiing, and Unfortunately, the skiing is done out here in Wyoming, where I am. I'm actually on the Idaho side of the Wyoming border, but I'm right near Grand Targhee, Jackson Hole, Big Sky. They all got to close their seasons a little earlier than I would like because they share land with the National Forest Service, and that requires them to shut down. I think there's still some decent skiing to be had in Colorado. Not sure if I'm going to make it to Colorado on my way back to New York, but I would sure like to. I'm probably going to be heading back to New York in early June after this year-plus excursion of travel in the United States. It's been an incredible experience for me. Here's my email address. So today I'm going to be talking about charts, giving an update on markets and kind of where things stand, maybe talk a little bit about some individual stocks and some positions. Then I'm going to be talking about T3, right? What we offer as far as trading accounts go, specifically for retail and proprietary trading. Let's go to the charts. All right. Here we are. So here is my daily SPY chart from my software that I use to trade. I'm on Lightspeed. So as you can see, we had a really boring, tight day yesterday. It was one of the tightest days range-wise for the SPYs that I can remember in quite some time. You can see this was yesterday's price action. Very tight, very boring, very sideways. Today we started with a little opening sell-off, and now we're rounding up. But so far today has been pretty quiet as well. And even though I'm super bullish, why am I super bullish? Well, just look at the chart, right? We broke out here at the end of March, which we spoke about, probably spoke about here, definitely spoke about in my virtual trading floor, probably spoke about here in the weekly update. We broke out here in the end of March. This is when I started getting really bullish. April has just been this grindy uptrend continuation, and now this last week or so, we've seen bullish money rotation. We've seen some of those highly speculative, high multiple, you could call them ARC names if you want, really start catching a bid over the course of the last few days. We were all over that as well. The market is just feeling incredibly bullish technically. You got Jamie Dimon calling it a potential Goldilocks scenario here for markets. Larry Fink came out last week with some really bullish comments as well. I don't see anything holding us back right now as the Fed, remains extremely accommodative, even as the reopening is occurring. So people are getting vaccinated, people are getting out there. There's definitely some concerns. What we're seeing in India right now is obviously a huge concern. It's very sad, but hopefully they're going to be able to get access to the vaccine as well at some point soon. And the market here continues on. This is an incredible bull flag that the SPYs have built out. The Qs building out a really bullish consolidation as well. Our former leader from November, right, IWM, Russell 2000, really took over in November 2020 and led us all the way through March or so when it had this correction. Took a pause in April, right? You can see the SPYs and the Qs really ripping higher in April, right? Again, here's our SPYs, here's April, here's our Qs, here's April, here's our IWM, giving up that leadership to the NASDAQ, right? And it really started with Microsoft. Microsoft breaking out when they got that $22 billion contract from the US government. Apple following soon after with its breakout of this pattern that we spoke about. That's what really lifted the NASDAQ and the SPYs at the end of March, beginning of April. And now, what are we seeing now? These last few trading sessions, the IWM is finally closed above that key 225 level that I've been talking about, where the IWM would turn from neutral to bullish. So the IWM is in absolute bullish territory. I actually spoke to my team at the end of last week about these two trading sessions right here. So on April 20th, we had this little breakdown in the market. This is when also a lot of those speculative names, which we can take a look at, got really oversold. The very next day, completely negated it and closed on highs. This little pattern in here is extremely bullish. This kind of fake breakdown that's completely negated the next day. Why is that bullish? Well, think about it. from the perspective of supply and demand in the marketplace, right? Which is really what technical analysis is. People think technical analysis is memorizing chart patterns. It's not memorizing chart patterns. Knowing chart patterns is a good thing to know, but just memorizing what something looks like is not enough to be a successful trader. You need to understand the supply and demand implications of what is actually making up what you're looking at in the chart. That's the key, and it's also why it's not easy. So what happens here in this breakdown? People who are long get stopped out. People who want to get short hit that button to get short. Now when that gets completely negated the next day, what does that mean? Well, it means that if you sold on this previous day, you got out of your long positions, you're kicking yourself. Oh, I got shaken out, I can't believe I did that. So those long sellers who got out, they are not going to be on the offer anymore. So they're not holding the market down. And they may be inclined to repurchase their stock and chase higher, right? So that, from our long market participants, is a lack of selling and potentially new buying. And if you short sold on this day, oh, the market's breaking down through 220, I'm going short. And then this happens to you the next day, well, what are you? You're in a tough spot. You're getting squeezed. You're losing money. And that is buying. So this little breakdown here that was immediately negated is really important overall for our understanding of supply and demand in the marketplace, because it leads to additional buying and potentially a lack of selling. And now we've seen kind of lift off over the course of these last 3 days. The IWM has resumed relative strength. We've seen strength from banks, small caps, speculative names. And a lot of those speculative names we were looking at basically on lows to get involved in. You can look at Jumai. Jumai, 5 days down, on the 6th day it gaps down. It's extended to the downside versus the equilibrium area here into the 200 day. Well, we're coming in and we're looking at buying on this day. You look at Skills, right, which I know now, Kathy over at ARK bought a ton of this thing, but this is another one of these speculative names. First of all, almost all these stocks are down 50 to 70%, depending on which one you look at. And here you got similar situation. 5 big down days in a row. On this 6th day, volume picks up in a big way, completely explodes, and this thing is actually now confirmed a reversal. Some of them are starting to confirm reversals. So a reversal is when you go from a pattern of lower lows and lower highs to a pattern of higher highs and higher lows. That is confirmed here now in Skills. The only issue with the stock here is it's honestly gotten a little bit extended. So there are just countless examples of these types of stocks that gave great little buying opportunities into this downside extension on this day. We were coming in and we were looking at a whole basket of these types of names to see if they could come in with bounces. And now they've had those. So into this area, it's a little bit of a less is more type of area where we want to see, can these retracements higher actually become reversals higher? And it's not confirmed yet for most stocks. It's confirmed on some, like that Skills that we looked at. But can that retracement higher become a reversal higher? And it's much more difficult. So if you're buying these names now, even though my personal thought process is we have some more upside that we can see here, if you're buying these names now, you're definitely buying them in an area where you have a lower probability of success and a worser risk reward than when we were looking at them down into that extended capitulatory area. So those have been those names, and that's with the IWM starting to regain that relative strength. Now, today is a little bit of a less is more type of day, and you can tell yesterday and today the price action's been really choppy here with our SPYs. This is yesterday and today for the NASDAQ, yesterday and today for the IWM, which is still showing us our relative strength. Why is, say, a little bit of less is more? Because we've got some big events occurring that are going to affect the market. We've got FANG names, some big names reporting earnings after the market closes today and after the market closes tomorrow. I think we've got Microsoft, Alphabet, AMD after the close today. We've got Apple tomorrow. These companies, Microsoft and Apple, the market caps on them are so huge that they tend to move the entirety of the market. And I can't tell you where they're going to go on their earnings report. I can't tell you what the numbers are going to look like. I can tell you that if you hold stock into an earnings report, you are 100% gambling. There is no advantage that you can have holding a stock into an earnings report. I think even if you knew what the numbers were going to be, for the most part, you still wouldn't have an advantage because you don't know how the market's going to react to those numbers, right? It's very typical. We see it in every single earnings report. There's always that company that beats on earnings, beats on revenue, guides higher, and sells off all day. I mean, just look at what the banks did, right? The banks already started this earnings season with a bang. At least their numbers were, but the market's reaction to them was not, right? JP Morgan just being met with selling. Goldman Sachs also, tried to catch a bid on fantastic numbers and really wasn't able to give any follow through. Bank of America also, met with selling. They all reported fantastic numbers. Morgan Stanley met with selling. But I don't understand. They beat on their earnings. Doesn't that mean they're supposed to go up? Well, it depends on the market's expectations, right? And just because you beat the average estimate of a sell-side analyst does not necessarily mean that you beat the internal expectations of some of the largest shareholders of those companies. And it's the largest shareholders of those companies that are actually going to be the ones who move the stock. So, it sounds like the earnings numbers across the board, we're seeing dramatic beats. We're seeing, earnings beats at a rate that is potentially working towards like a record for the market. But the stocks are not necessarily following through. So we'll see what happens with Google. Google has had a huge move into earnings. From my experience, usually, and you even saw this with the banks, when a stock gets bought up very heavily into earnings, a lot of the times, just meeting or beating by a little bit is not enough. If they buy your stock up into earnings to this degree, then that company is going to have to really report some absurdly excellent earnings in order to get that further continuation. So we'll see, if Alphabet's able to do that. Microsoft is one of my favorite companies in the market. I absolutely adore Satya Nadella, the CEO. He has just done such a fantastic job at this company. It's building up this beautiful bull flag. Obviously, getting a $22 billion contract from the government certainly helps. But we'll see what the earnings report looks like. Amazon, when Amazon reports, once again, everyone's looking for, is there going to be a stock split? I would love as a trader, I would love for Amazon to split. This is not a good, you can't day trade Amazon. It's just too expensive, in my opinion. This is not something I go to. I have a position in it. I have a small position in it. And it's always got to be bigger picture for me on these more expensive stocks, just because there's not enough liquidity for me to be actively trading Amazon on a day-to-day basis like I do with a lot of the other stocks that I've been involved in. So we'll see what happens. Also, the Fed. We got the Fed speaking tomorrow. Their meeting starts today. Information is going to come out tomorrow, so that's potentially market moving as well. So basically, market participants today, yesterday, they're sitting on their hands, and you should be too, unless you are able to really pick your spots in certain stocks that are still able to move with relative strength or relative weakness, or able to move by having some sort of news that's independent to the market. This MBIS, absolutely insane over the course of the last few days. The potential next big, Wall Street Bets stock. I actually was coming in and buying it on this day, and I got pushed out because it broke lows on that day, and then of course the next day it absolutely explodes. Am I upset that I bought on this day at like $13.50 and I didn't have stock for the move to 28? Not really. I've been trading too long to be upset every time I miss a move. It's happened many times over the course of my career, and it will happen many times in the future. I am by no means a perfect trader, and anyone who ever tells you that they're a perfect trader is lying. You have to have a rule set, an approach to your trading, and inherently, by dealing in rules and dealing in probability, you're going to have things push you out and go without you. It's fine. I actually ended up taking the other side of this trade at a certain point yesterday and then adding to it pre-market this morning. So I was short MVIS this morning, but I am out of that trade now as it gave me the retracement back down that I was looking for. But this is an example of a stock that is, without a doubt, moving independently to the market. Some other favorites of mine, this Coursera. Coursera has worked its way back to 50, which is what I was looking for. Just about to 50, not quite there. This pullback surprised me. I think I might have mentioned that last Tuesday. This pullback surprised me just in the depth of it. I really only thought this pullback was going to happen to $50 or maybe the upper 40s, and they pulled this thing all the way down to $40 before really turning this thing back up. I'm a big fan of this company. Another one I'm really keeping an eye on right now is this BOEX. The BOEX here is a SPAC. The understanding is that it's going to become WeWork. I think this one's actually worth talking about. So I've been in this position since that was first announced here on this day, and the volume came in on March 26th. And for me, it seemed like a no-brainer to come in and purchase some above $10 because, again, if you understand how SPACs work, if no deal gets done, the cash is returned to shareholders at about $10 per share. I'm sure less some fees. So for the most part, that gives you some defined risk there. The downside is actually that a company merges with a SPAC and the company itself is actually worth less than $10 a share, which we have seen, especially in these sell-offs, some of these SPACs trading below $10 per share. Lots, which I have a position in, is an example of that, right? Lots here you can see, it's just a SPAC. It's steadily sitting here at above $10, a little bit of a premium to the cash value. They announce that it's going to become a company and gets an initial spike on that, and then people maybe realize that the company is not so good, and used car sales isn't so great. And they bring this thing below $10. So that's your risk, is that the company that it merges with is actually worth less than the cash that the SPAC actually had. And I've been kind of anti-SPAC for a little while now. I'm of the thought process that there are more SPACs out there that have cash than there are actually good private companies that they can merge with. And I think that there is a perverse incentive structure for the SPAC managers to get deals done and not actually care if it's a good company or not. So with that said, I, for the most part, am avoiding kind of the SPAC game, but I really like the idea of this WeWork. And you can ask anyone that's on my trading desk. When WeWork was floating its IPO, I was so excited for that IPO, because I don't remember ever having so much conviction on shorting an IPO in my entire career. I wanted to short that IPO of WeWork if it were to go public, and it tried to. I wanted to short that thing to zero. It was like a $55-60 billion valuation on a company whose business model made absolutely no sense to me, with this CEO who, for lack of a better term, I really do not like. And that guy is no longer there, which is fantastic. And now you've got a completely different company at a completely different valuation. The valuation has come down on this thing dramatically, probably by 10x or so. And it's as the company, I think, is better positioned than ever. I've been remote working for over a year. And I am looking forward to getting back to T3's office. I am looking forward to the camaraderie of getting back into T3's office. But at the same time, you better believe I've enjoyed traveling the country. You better believe I enjoyed having 46 ski days, skiing chest-deep powder at Grand Targhee and Jackson throughout this last winter. You better believe I've enjoyed all that freedom. And I think a lot of companies are just looking at their situation and saying, wow, over the course of the last year, my company has done just as well as it ever did, but everybody's remote, so I'm saving money, I could potentially save money on office space. But how do we tackle the problem of developing camaraderie amongst our employees? We still need a place to get together once in a while. Where can we do that? We could potentially do that with a WeWork office space, right? So I wouldn't be surprised if we start seeing a lot of corporations start doing deals, potentially corporate deals with WeWork, where, hey, can we get allocated space for periods of time throughout the year so I can get all my employees to come together? So I'm excited about this one. The technicals here have honestly not been trading great. You got a little bit of support in front of this $11 area. I again, for disclosure purposes, I do have a position in this, but I really think that your risk on this is down to $10. If when the merger fully happens, if this thing starts breaking down below $10 after that, then that's where your risk is, and you can kind of get out of the way. And if this thing really starts announcing a whole ton of corporate strategic partnerships of companies that want to do this going forward, and I mean, is it possible? I used to think there was no chance WeWork could ever become a profitable company. But maybe that's actually possible now at some point in the future. So this is one that I've got a position in that I'm really excited in, kind of amongst my positions that I've been building into. And outside of that, Bed Bath & Beyond finally catching a little bit today with some bullish option flow, but this thing needs to get and hold above $27 for it to start looking a little bit better. Alibaba, I'm a huge fan of. I think this thing got super beaten up just on the whole and financial thing and then the regulatory thing and what Jack Ma did, but they got slapped on the wrist. This is what happened. This is the day here, this gap up, when the Chinese government actually announced what the punishment, the fine, I think it was a couple $2 billion, is going to be on Alibaba. But compared to the amount of money that they bring in, it's a slap in the wrist. And this company, along with like JD, maybe PDD, they have almost a monopoly that's government granted on the largest and growing middle class in the world. And I think that the sell-off has actually made this thing relatively cheap. It's starting to work its way higher. Technically, it's kind of neutral here. It's in no man's land. You really want to see this thing start getting above, 142 to 145 again. But Alibaba is another one that I'm kind of a big bull on. Honestly, I'm feeling bullish across the board on this market. I do want to take a little bit of pause until I see what the FANG earnings look like and we can get that behind us. But overall here, technically this market's bullish. Maybe it's a little bit extended as far as fundamental valuations go. Fine, but you got the reopening play, you got government support, you got Fed support. My only black swan event that I'm keeping in the back of my brain, and I can't forget about this, is a virus mutation where the vaccine does not work that is potentially significantly more deadly than what we've already experienced. That's my number one fear when I see the numbers spiking in India as far as the big picture goes. And if that were to happen, it could make the sell-off that we saw in the market last March look like a drop in the bucket. Because at a certain point, there's only so much the governments can do to actually be able to really provide that financial support. But until then, and hopefully that never happens, we're in a bull market. And I'm telling my team every morning, on certain days we need to be a little bit cautious, and certain days we need to be a little bit patient, but we want to continue to err on the side of the longs. So that's it for the market update. Let's talk a little bit about T3. So proprietary trading with T3. We are one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have 4 physical offices. We sized that down a little bit. Why did we size that down a little bit? Because first of all, the office has been closed for over a year. And the communication amongst the team and amongst the professional traders at T3, who have primarily been utilizing the ProDesk VTF, has been excellent. So there's no rush to get everybody back in the office. So trading remote, no problem. To become a professional trader, you do have to be licensed. You have to pass an SIE, Security Industry Essentials, and a Series 57 examination. You don't want to become licensed because it sounds like a headache, no problem. Reach out to me about a retail account with T3. T3's retail accounts are highly competitive. We offer direct market access, so you choose your own routing. It's a little bit of a learning curve with that, but there's a lot of benefits of it. That's how the professionals do it. The professionals know how their orders are getting routed to the marketplace. They're not just pressing buy now in their, you know, regular retail brokerage account and having that order, you know, sold to an HFT firm who's front running the order and having you get a worse price. So again, be a professional trader. Got to be licensed. Don't want to be a professional, reach out about a retail account with T3. In order to be a professional, there's also a background check process that you have to get through as well. You know, do fingerprints. Once all that's done, you got through the licensing, you got through the background check, then we can get started with trading. We have actually 4 different trading software options now. I'm excited to announce a 4th option that we have for our traders. So we've got Lightspeed, we've got Sterling Trader Pro, we've got Wolverine, which is also known as WEX. We also have the old RealTick platform, which was rebranded as Ease, EZE. So now we have 4 different software options available for our professional traders. On the retail side, we only have Sterling Trader Pro. It's an excellent software. Personally, I've been using Lightspeed for over a decade. I definitely recommend that software as well. As far as asset classes go, we have equities, we have equity options, we have futures, we have options on futures. So if any of this interests you, reach out to me and I can put you in touch with the right person. Personally, I'm an equities trader at T3. And I speak to a lot of people on the phone who are interested in trading options at T3. And that's no problem. We can facilitate that for you. But my personal thought process on trading options, I'm a directional trader. So I've always asked myself, well, why do I want to trade it? You know, and if you're a directional trader, the biggest benefit of options is the natural leverage that's inherent in the product. And if I was trading in a retail account, maybe I would be an options trader, but I'm not. I'm trading in a professional account. T3 gives me a lot of capital access. We usually start by providing traders capital access at 20 times their account for day trading and 8 times their account for equity overnight positions. So why would I want to trade options, which are a less liquid product and subject to time decay, just for capital access when I already have as much capital as I could ever want? With that said, we do have options access, and the people at T3 who are professionals, who are typically engaged in utilizing options, it is because either they're doing a lot of swing trading and they like to sell covered calls for hedging and risk management purposes, or they're doing some sort of strategy that is unique to options trading. Spread trading is an example. You know, trading your calendars and your iron condors and all that good stuff. Then it makes a lot of sense. So, you know, reach out to me if options trading interests you and we can have a conversation about it. Reach out to me if futures or equities trading interests you as well. We can have a conversation about it. So some things that traders should know when they get started. First of all, I think, you know, typically people recognize that the number one advantage of becoming a professional trader is the capital access. And that's true. And maybe I'm a little bit biased, but I also think access to the training and development programs that we've developed here at T3 is huge. I'm working with such an awesome community. The community of traders that I work with, they make me money with their trading ideas. And I like to think that I make them money with my trading ideas and my thought process as well. So we have an excellent team here who are communicating information constantly. We have training programs that we've developed. We have a morning meeting every day at 9 a.m. Eastern. We have an afternoon meeting every day at 10 after 4. Every afternoon meeting that I conduct ends in a team Q&A. That's the opportunity of anyone on the team to ask questions about anything trading related, whether it's game planning or risk management or routing or execution or on a trade that they took that day that we can review as a group. So we just have a fantastic community here. And the capital access, I mentioned this already. So when you open up your proprietary trading account with us, you will be required to fund your account with a capital contribution. We typically start by providing capital access at 20x for intraday trading and 8x for overnight positions. There's some leeway on both sides of that with those numbers depending on your approach and your experience level. By the way, all that training and development I mentioned earlier is free. And if you're an experienced trader, well, you want to utilize our balance sheet. T3 has a very strong balance sheet. We have a lot of capital, and that capital can be distributed to traders to work with. So if you want to be a trader who comes in with a $2 million account because you want access to $40 million, no problem. Reach out. There's my email address. And you get all this other awesome stuff for free just by having your account with us. You get access to my virtual trading floor room, the Pro Desk. It's called the Pro Desk because that's where most of the pros are. You get access to my training program. You get access to Scott Redler. You get his, I think they call it the Alpha Room now, and his newsletter. So just a tremendous amount of value. Why do we provide all of this training, education, and development for free? Because our goal is to make you as successful as possible. If you're successful, you're making money, and you're making money in your T3 account. So T3 is happy too because they're making money also. So here's my email address. Reach out to me. Become part of the team. You got a lot of options on how you can do it. You can purchase a subscription to ProDesk. You can become a professional trader with a prop account. You can open up a retail account with T3. I mean, if you're a trader and you're watching this, you should just email me. Here's my email address. I'm going to jump back to managing my positions, managing my team. I hope everyone has a great day, a great weekend, and a great end to the month of April. So thank you.